Welcome to the Maritime Vision podcast. I'm your host, Paul Wioli. In each episode, we bring you exclusive interviews with maritime professionals, industry experts, and students. Our guests come from different backgrounds, including shipping, yachting, offshore, supply chain, and more. Our goal is to give you all the knowledge you need to succeed in the maritime industry. Hello everyone, welcome back to a new podcast episode. And today in this podcast episode we are with Nicole. Today we are going to talk about private equity in the maritime industry. Hello Nicole, can you introduce yourself please?
Yes, hi Paulie, and hello to the listeners. Thank you for having me today on your podcast. So as I was introduced, my name is Nicole and I'm working as a private equity advisor focusing on the maritime industry. I've worked in maritime private equity and sort of accompanying industries for around 4 years now.
Great. So can you give us maybe a little bit an introduction about private equity? Later we'll talk more about the maritime, but what is it exactly?
Sure. So I think, private equity itself is quite a simple definition, but it's often due to, sort of lack of maybe understanding the alternative asset space, it's often confused with a lot of a broader sort of alternatives definition. So private equity itself is sort of, the buying and selling of actual companies using private capital or buying a carve out of a company. But it's not really applicable to individual assets, where if you're looking at the alternative space or the real asset space, there it's a lot more specific to sort of purchasing individual assets. So individual ships would sort of fall into real asset under the alternative space. So just to differentiate that they're not necessarily exactly the same.
Okay, just to because before like private equity was not very common, but now it's become like very common, very quite famous now because with all those startups, so I imagine like why did you choose to work in this field? Because I think it's quite dynamic. Can you explain a little bit?
Yes, I think that's a very good question. So I actually started out my career a lot in the macro strategy space. So that's obviously covering kind of more of your traditional assets. So, more kind of public equities, public bonds, fixed income, etc. But then transitioned into the world of private equity and private capital markets. And the reason for that is, it's becoming a lot more competitive in the sort of traditional asset space, and you obviously have algorithms and supercomputing and quantum computers that are able to often pick up on milliseconds to generate alpha, and it's a lot harder for a human being to kind of do that. Obviously there's niches in which you can definitely generate alpha, but I'd say overall the industry is becoming quite challenging as a macro kind of strategist form of investing, particularly with the rise of index funds, as you've seen in BlackRock, all of the iShares funds, and private equity. It's really exciting, and the alternative space, it's really unique, and you can generate really kinds of specific ways of investing and specific kind of returns and yields that is maybe not as available in the public space.
Okay, it's quite interesting. So so you are quite focused. I've seen on your profile, so donc énergie, the energy industry, on maritime as well. Can you explain why did you specialize on those specific field?
Yeah, sure. So I think, as the world is really becoming more and more focused on becoming green and transitioning, obviously, from this fossil fuel-led economy to a more green and sustainable one, there's a very high need or infrastructure that will be required around the space. So it's a lot more than just, the energy itself. It's creating the infrastructure accompanying it. Things like refueling stations, pipelines, grid connections. I mean, there's so much that is required. And more so than just the infrastructure, you also obviously have the maritime that is needed because ships carry fuel, as you know, and ships carry goods which need fuel. And so it's a massive part of this green revolution is the ships will carry the fuel, but they will also need to be green themselves because as a carbon emitter, the maritime space, I think it's still around number 5. If you have to rank all the countries in the world, maritime as an entire sector is the 5th largest as a carbon emitter, although it is still the most efficient form. So when you look at vehicles or aeroplanes, but yeah, there's a big need. It's going to play a big role going forward. So I think it's an exciting time to be both in energy, sort of energy infrastructure and maritime.
Yeah, I think that's you. I think you answered to the next question, which is why it is the attractive sector, especially in private equity. First of all, maybe because of course is essential in the world shipping, and secondly because we have so many challenges we need to face. On it means that many projects about it. So many projects mean a lot of investment. If I'm right.
Oh, yes, definitely, 100%. I mean, just in terms of the decarbonization needed for international shipping sector, sorry, to become zero carbon, according to the Global Maritime Forum, which is a, global body sort of governing the space, there's a need of around $1 trillion of investment needed to decarbonize shipping between 2030 and 2050. I mean, obviously also now, but to create this net zero shipping future. So, as you say, there's a large need for investment, for capital, but on top of that, the shipping sort of sector itself is it's a very unique sector because it's very cyclical in nature, where, many other sectors, obviously, the sort of backbones of any investment is to buy low and sell high, right? And have achieved a return either in price and or yield or, some dividend return. But the reason why shipping can be really attractive is because the cycles are very specific. It's, it's such a cyclical industry because of the demand and supply dynamics coming from the fleet growth versus the need for a specific segment to deliver, let's say, we saw in COVID, obviously, there was suddenly a need for consumer goods and you saw the container market booming. So, it's so cyclical that for a private equity or private capital market that's focused on low high, it's a very attractive sector. And then on top of that, you have the green need and the need for capital to flow. So it's definitely a sector that going forward is still very much a hot sector to be involved in.
Yeah. I mean, the macroeconomic of it is quite insane and big. I want to just clarify something about. So many people think private equity is only about startups, the world of startups. But can you elaborate on it? Because I think it's more like that. It's more than only startups. I think it's even for large enterprises, SME. I think you can elaborate on it.
Yes, that's a very good question and point. I mean, private equity, I'd say, is definitely, it's got such a range of areas it can cover. And I mean, maritime these days, to use it as an example, you can turn private equity into actually sort of more kind of quasi-infrastructure style investing. And obviously infrastructure style investing is really on the other side of the spectrum from venture capital and startups, because in the world of infrastructure investing, you've got very long-term projects, very long-term capital, and often you have the off-taker, or shall we say end user, who needs this infrastructure for 20 or 25 or longer years. And so they enter into very long-term contracts. And so you have revenue foresight, Whereas with venture capital or startups, you have the opposite of that, where there is no revenue foresight. I
Yeah.
mean, obviously you predict what you think will happen, but there's no long-term contract that someone has entered into. So as an example, using, let's say, a port. So now what you're seeing is with the growth of green energy, you're seeing offshore wind becoming a big,
Yeah.
play. And with that, you're seeing obviously all the ships, the offshore sector, which is growing. And with the offshore sector and the need for the turbines, the foundation, you need a bigger port space because all of these massive turbines and foundations need to sit somewhere before
Mm.
storage. But then you also have the ships coming in and out. So a lot of ports need to be developed. So that's an example of, an infrastructure asset. And obviously, in that case, you will have long-term revenue foresight because a large developer like a Equinor, for example, or a Vattenfall, who will need to use that space to do the actual offshore wind farm development, will then enter into long-term contracts with the port. So
Okay.
and maritime also fits into that because you're not necessarily just buying a vessel hoping someone's gonna charter it out and then look to sell it, but you can enter into very long-term charters to
Mm.
creditworthy counterparties, which can then actually turn this kind of more sort of unknown revenue element into actually a stable, attractive running yield and really long-term total returns. So yeah, it's really, I think definitely parts of maritime are becoming more and more infrastructure-like in
Mm.
investment style.
Okay, quite interesting. I didn't provide you the next questions. It's like about the different stage we have when you want to invest in a
Mm.
project. Can if you want, of course,
Mm.
elaborate on it? Because I think we have for startups. I know we have seed.
Mm.
I think all those terms are not familiar with everyone. So
Yeah, sure. So I'm not really a specialist in the startup space, but
okay.
of course you've got, your seed rounds. You also have your angel rounds, and angel rounds are very early stage. They're often like when, a company kind of or individual or founder has an idea, more so than there being like a commercial blueprint. And then you have your seed rounds, which is when you're a lot closer to commercialization stage.
Mm.
Um, but I mean, in the world of maritime, the areas where you would find this style of investment in maritime will be things like green technology that will be used to green or decarbonize the fleet. So maybe certain kinds of engine systems that are
Mm.
going to be seen as, using a future fuel, or you're seeing a popular area now is these rotor technology sort of. It's kind of almost back to the old days of using wind propulsion, back before engines.
Yeah.
And you're seeing like sort of VC companies coming into that space. And many of them have like, their designs and their concepts, and they're now looking to test it. So it's still sort of like pre-commercialization stage. So that would still fit in the seed rounds, not
Mm.
so much angel rounds. But that's kind of the only real area of maritime that is this venture capital space. But, when you're actually buying or selling a ship, and you're entering into charters, whether they're long term, meaning more quasi infrastructure, or whether they're short term, which is then a lot more cyclical,
Mm.
and asset play based, then you're talking about private equity and infrastructure. You're not really talking about, the venture capital
Okay.
space. So
Okay.
yeah, they definitely, private capital markets is the umbrella. And
Mm.
then you've got, your early stage VC, which is equity. You've got your private equity, you've got your infrastructure style, and then you've obviously got your private debt, which
Okay.
is kind of, fitting under private capital markets, but not on the equity side.
So in your side, I mean,
Mm.
like more about infrastructure, all this. Do you have like stage when you want to invest a specific period with the name
Mm.
or not really?
Not really, no, no. It's no, not. I mean, most of these would be. I guess the closest sort of example is if you're investing in an infrastructure fund, you can invest in one which is either open-ended or closed-ended, and then they classify them, and also the same in private equity, they classify them with vintage years. So sometimes, let's say a private equity maritime fund goes to the market and they say, we want to run a new maritime fund that's going to be investing in, let's say, I don't know, the container market. And we want to raise the fund now, and we anticipate it to be for a 7-year life cycle. That's a closed-end fund, right? And then that vintage year, let's say the capital is raised this year, then it's a 2024 vintage year. But then you also get open-ended funds, which some maritime, just because we're on the maritime topic, but some maritime funds will have open-ended funds, which, there is no necessarily vintage year and exit year. They will manage it asset by asset. So, they'll maybe buy, let's say, what's at the moment attractive in the maritime market is like the tankers. So they'll buy a tanker now and maybe sell it in 4 years or 3 years, however they want to do it. So it's a lot more flexible. But yeah, that's kind of vintage year is a key term in private equity. And like I said, closed or open is kind of a key term as well.
Okay. Wow. Okay. Well, very interesting. I'm not familiar at all about this, so it's very interesting. So, your mission of advisory. So, what is it exactly? On what value do you bring to your clients?
So at the moment, what I used to do was I used to work at maritime private equity funds, so where we were doing the actual buying of, the actual assets low. Hopefully you buy them low if you're doing a good job, and then selling them high with getting charters attached, etc. So I was sitting at the funds, but now working as a private equity advisor, I'm sort of sitting in between the buy and the sell side. So why it's quite interesting is when you're working at a fund, you're sitting at the buy side, right? When you are an analyst, for example, that covering maritime, you're sitting on the sell side. If you're producing research. But as an advisor, you're sitting in between. And why that's really interesting is you're also working between both sides. So you're very much aware of what different kind of your clients who could be funds. So what different kind of funds, what they're looking for in terms of returns, what they're looking for in terms of risk profiles. Are they looking for infrastructure style assets? Are they looking for more early stage assets? Are they looking for long-term contracts with sort of feasible revenue attached? Or are they looking for sort of more of an aggressive play on the market where you don't have charters and you can hopefully try pick up on, that volatility in the markets? And so it's quite interesting because you really get to see what the market is thinking and how different players are viewing the market. Whereas when you're sitting at a fund, it's also very rewarding sitting at a fund because, you see your kind of decisions turn into hopefully fruitful returns. But, but you're obviously a lot more pigeonholed, shall we say. You don't get to see as much broad activity in the market. So, that's quite interesting. And so either when you're working as an advisor, you either will have a mandate from a client who says, okay, I want to go into maritime space. Can you tell me which area should I invest in? How should I go about doing it? Can you help me find vessels that are for sale or funds that I should invest in, etc. So you get a mandate and you can kind of really help them, either educate them on what they need, or they already have an idea. Maybe they've covered the markets already internally and they know what they want. But as you can see, it's quite a dynamic role. And, you really have a good idea and grasp of what's going on.
Yeah, that's good what you said because I think, as you mentioned, you start like all aspects. And so I think you need a little bit some experience to be an advisor. I think, of course,
Yes.
yeah. Okay.
I think definitely, because if you haven't been at a fund and you haven't seen the
Mm.
process of how they choose their investments, what the style is like, what the options are, it's quite hard to
Mm.
advise.
Yeah.
So you're definitely correct in that.
Okay, great. So now I want to talk about a term I've seen on your LinkedIn profile, which is debt financing. What
Okay.
is in? What is it? And yes, what role it play in the maritime investments space?
Sure. So, sort of as I mentioned a little bit, you have this private capital umbrella, and within private capital, you've got the sort of equity side and the debt side. And
Mm.
then within the equity side, you have the private equity, the infrastructure, the venture capital, just to be kind of broad. And then you've got the credit or the debt side.
Mm.
And so it's basically very similar to a traditional bank loan in many ways. It's just obviously provided by specialists who understand the maritime
Mm.
industry. Because a few years ago, sort of in 2008, 2009, obviously we know about the global financial crisis. We know about the credit crunch
Mm.
coming from the US and global. But what happened in shipping, people don't, if you're not in shipping, you don't really kind of know about this as much. But you actually had a massive credit crunch in the shipping debt cycle as well, where loans were given leading up to 2008 on the back of asset values, meaning vessel values that were obviously very inflated, because obviously
Mm.
everything was inflated. And so once the bubble burst, and the shipping values sort of massively declined by, at
Mm.
least 30, maybe even 40% in some markets, you had all of these loans that were given out on the back of high residual value or high asset value, which was no longer there. So suddenly you suddenly were very exposed as a bank. And,
Mm.
because obviously at the end of the day, a bank will provide a loan if they feel they have security. And in this
Mm.
case, when you're providing a loan to a ship owner or to purchase a ship, it's the value of the asset, the ship. So
Yeah.
if the value of the ship is suddenly half of what it was, your guarantee goes out the window. In many
Mm.
ways. So, yeah, there was a massive crisis, and many banks went under. Many maritime lenders were bought out by governments. This was a very big problem in Germany, as obviously the German shipping market was and still is quite strong or is quite big. But they just gave loans based on ridiculous asset values, and many of them had to be um,
Ah.
yeah, restructured, massive crises in that sector. So now what you're seeing is you're still seeing loans being given out, obviously, to fund ships. And I'd say typically the loan to value that's given by a bank is typically around 60 to 70%.
Mm.
But they want to see revenue visibility. So they don't just, they're not just relying as much on this asset value, on the ship valuation, but also on the revenue visibility. So the banks prefer the ships to engage in long-term charter contracts with credit-worthy counterparties. So let's say, you're funding a tanker, a large crude carrier, then you obviously, the banks will love it if there's a credit counterparty such as Vitol or Trafigura.
Mm.
They obviously seen, or BP or Shell. So because of when it comes to the loan, if you have these long-term charters attached, the credit risk actually shifts. It shifts away somewhat from the ship owner, but to this provider or the payer who's the charterer. And so you can actually end up getting quite a good rate, even on a vessel, if you have these really strong end users, aka the credit-worthy charterers, like a Shell or BP, if we're talking
Mm.
in a tanker space.
Wow. Okay. Quite interesting. So, of course, this debt financing is like who give it, like the bank or like private actors? Like,
So it can be a private credit fund.
okay.
So many alternative So let's say an alternative asset manager. An alternative asset manager will have both private equity and private credit sort of funds. So a private credit fund could be providing these sort of credit loans, or it could be an actual bank itself. Many private credit funds, what they do is they actually use back leverage. And back leverage means a loan from a bank or from
Oh,
another
okay. Yeah.
credit counterparty. So you actually have almost like double leverage on some of these loans. I mean, that doesn't really matter so much to the ship, to who's purchasing the ship. They don't really care so much to who down the line is, how many parties are involved. But yeah, there's often back leverage. So I know like JP Morgan, Goldman's, they kind of the type of entities who would provide back leverage to other private credit funds.
Okay. Wow. Okay. So, but imagine I am a shipping company. I'm a ship owner. I want to take a loan for my vessel. What is the process?
So the process is you would engage with, say, a financier, whether it's, as I said, a bank or a private credit fund, and then the private credit fund or bank would then go about their due diligence. So they would need to understand, it's all about payback potential, right?
Mm.
So they want to understand how many ships do you have already on your book? What is your ownership style of these ships? Are you fully owning them? Or are you kind of, do you already have outstanding debt on many of them? What,
Mm.
how is your risk ring fenced? So what I mean by that is, which is why shipping is actually really quite interesting. So often when you buy a ship, you put it in an SPV, a special purpose vehicle, and you ring fence the risk. So let's say you're a ship owning company and you have 10 ships. Many of these ships will have their own SPV. So you will have the loan that will go directly via this SPV. You'll have the charter income going into that SPV. So in many ways, the risk is quite contained.
Mm.
So if there's an issue in one of the other ships, let's say you have a container vessel and you have a tanker, those are obviously affected differently because they're in completely different cycles. And so let's say you have a problem because the container market bursts, then that's not going to filter through into your ability to pay back your loan on your tanker vessel because they're sitting in separate SPVs. So, the financier or the lender will check how these SPVs are set up, what's coming in, what's coming out.
Mm.
They will check the credit risk, which is, the charterer, who's going to pay it, or who, how
Mm.
much revenue visibility is coming in. And they'll obviously check your previous ability to pay and terms you've negotiated in your other SPVs to see how reliable you've been in terms of your payback.
Okay. So I want to try something. Is this process called the due diligence process or not?
Yes, exactly. Well
Okay,
done.
so that's the next question. So about the due diligence process, you told us about it, like how we make it. I mean, first of all, you need to be quite a specialist in the industry because
Mm.
that's very
Yeah.
important.
And it's also very, I mean, it's when you're doing due diligence, I mean, the word actually makes it sound sort of a lot more intricate than it is because it's not
Yeah.
really. You're checking, at the end of the day, the financier wants to know, can you pay back the loan? So it's like with any asset, if you buy a house,
Mm.
can you pay back the loan? Do you have income coming in? Is this income enough to service the loan? But obviously, a lot of the terms in maritime, they're quite legal in nature. So you'll often have lawyers that will need to be involved who will understand these processes. You will have covenants, and covenants are obviously terms set by banks, which you need to ensure you meet. So things like loan to value ratios. And I mentioned that earlier when we were talking about what happened in the German sort of maritime banking crisis, where these loans were given on the back of shipping values that were too high. And then suddenly, when your denominator, your value of your asset drops, you're so exposed. So these covenants will need to be continuously assessed. And
Mm.
on like a quarterly basis, for example, the banks will require a valuation to be done of the vessels.
Okay.
Because there is the bank sort of kind of what's the word, protection is the asset. So they could obviously take the asset back, hope to sell it to cover, and then to cover the payment of the debt.
Okay.
Worst case scenario. And
So
so obviously they want to make sure that those covenants, which is part of the due diligence, is setting up, all of these covenants. What ratio are we happy with? So that every month when they monitor and because their due diligence is not just once off. The banks are going to be doing it quarterly to check that you still have this ability to pay. And if you're meeting your covenants, like loan to asset values of the ships, your interest coverage ratio, which is your ability to pay interest out of, the asset value. So again, your shipping value, or coming out of your ongoing revenue, which is obviously your, say, monthly charter payments. So your due diligence process is looking at the creditworthiness of the end user and of the ship owner, and looking and comparing that to the track record of the company, and then also looking at how to avoid massive issues or risks by setting out consistent covenants and monitoring them going forward.
okay. What is the revenue for these investors, those banks? It's like the interest rate, because I know, for example, in the
Yes,
startup space, this is the share you take in the company in the early stage.
correct. Yes, well done. So exactly, your ongoing return is your interest or your yield
Mm.
that you get. So every month or quarter, if you set like a monthly or quarterly payment cycle, the bank will get their payment back, which is then the interest rate.
Okay.
So that's the return on the investment for the banks, yeah.
Okay,
Or
nice.
the financier, sorry.
Okay, so if I'm a private investor, but I don't want to have any interest back, I really like this company. I know it's a big ship owner. I want to
Mm.
be part of the company as well. I say, okay, I give you this amount of money or capital. Um, can I take some share in the company?
So then you would do a private equity transaction. So
That's the back.
exactly,
Yeah.
yes. Um, or you could, if you are a big enough investor, you could also do that on the public markets. I mean, there's quite a few
Mm.
companies that are listed, like Moller-Maersk, for
Yeah.
example. There's some sort of ship companies that are doing kind of LPG or gas carrying.
Yeah.
You could look at some of those if you wanted to invest. There's also examples of companies that were taken private. So a company that was listed, and there was a big private equity company who said, actually, I want to buy shares, or I want to own this company, but the private equity company wouldn't have been able to do this if it remained public. So then they would buy it and take it private.
Mm.
So, there's many ways you can invest on a non-interest way. So as you said, buying a share of the company, which is the equity part, whether it's private or public, or taking a public company private. Those are
Mm.
all options that you can go about doing that.
Okay. We have another term. Maybe I didn't provide the question. M&A, merger and acquisition.
Yes, 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 exactly. Yeah. So, I mean, mergers and acquisitions are sort of, I'd say that term it's useful because it explains why a company is being bought, where a private equity transaction just means a company is being bought, or a portion of a company is being carved out and being bought. But a merger and acquisition, depending on whether it's a merger or whether it's an acquisition, it provides a better context for why. So, if it's a merger, then it's two companies that are kind of quasi-equal that are coming together. So I don't know if you've heard of Cardalea and Eneti, but that's quite a recent transaction which happened
Okay.
uh, at the end of December. So, I mean, we're now sort of early January, so a few weeks ago, in which that was more of a merger because
Okay.
Cardalea and Ineti basically joined forces, and they will now be called Cardalea, and that will be listed on the Danish headquartered on the Danish Stock
Yeah.
Exchange, but they'll be listed also on the New York and Oslo Stock Exchange. But
Okay.
the reason why I'm mentioning this is because, that's an example of an acquisition where, they kind of found that together they can be a lot more efficient, and they're both specialists so they're not so much covering the merchant fleet, and the merchant fleet are the ships that you see traveling around the world, the container ships, the tankers, the bulk carriers, where this is covering the offshore fleet, which is, everything not related to those main shipping segments. So any kind of offshore oil and gas vessel or offshore green vessel, that you're seeing servicing the wind farms. But why this was a merger is because both of these companies were very, very strong in wind farm installation vessels, where so it
Okay.
made more sense for them to join forces and become one unit or the key supplier of the development of offshore wind installation vessels. And there's obviously a lot of
Okay.
synergies in that transaction.
Okay. So the benefit to them is just to become bigger on, uh,
Yes.
yeah,
And but
that's the goal.
and then sorry, just to clarify,
Yeah.
that was not a private transaction. That was a public transaction.
Oh,
So
okay. So merger and acquisition can be as well
exactly,
public.
yes. So
Oh, cool.
that's why I kind of wanted to highlight that an M&A is more of a why. It provides a better
Mm,
explanation. Where private equity, it's just private capital. Where merger and
yeah.
acquisition, it's like, are you being merged? Are you being acquired? By whom? With whom? Is it private? Is it public? Etc.
Yeah, for example, well, it was in the opposite side, but in France, for example, all the highway were public, then
Okay.
it became private. But if it was in the other way, it was, we can say, a public M&A, public acquisition, I think,
Yeah, if it was the other way,
kind of.
exactly, if it's sort
Yeah,
of listed. Yeah. So I mean, there's, it's quite complicated because there's many,
yeah, but
depending on which angle you're going from,
yeah.
it can be called multiple things. So yeah, it's definitely not a simple world.
Nice. Well, I think you already provided a lot of information about it. Now we're going to talk about the last topic of this podcast, which is more about, career advices.
Mm.
So what kind of, can I say, like, advices you can give to people who want to start in the private equity or even shipping finance investment field?
Um, so I mean, you definitely need to have, a qualification in this space because,
Okay.
that's just how the world of finance is. And
Mm.
because it is very technical and because there is so much to know, having a qualification in a finance or economics field does help a lot. Or, I've also seen some examples of sort of more technical people. So let's say people who studied maybe engineering or even
Mm.
maritime engineering, and then later on they do a bit of finance, and then they kind of move into private equity. They're also quite attractive because, to also understand some of the technical aspects of the vessels and the sectors are or is useful. But it's not necessarily that you have to do it. I mean, a lot of these private equity funds, they will also hire technical people who are on the kind of
Mm.
technical shipping side, who can give the advice and who can go and inspect the vessels. Because obviously, when you're buying the vessel, it's like buying a used car. How do you know that the person selling it to you is not lying? You need someone,
That's true, yeah.
yeah, you need someone that's technical. But again, that doesn't have to be the person that's on the private equity fund side or the analyst. Um, but yeah, you definitely will need a finance or economics based qualification. You don't have to have studied shipping because, you can learn it. It's just like any other
Yeah.
asset class that you just understand what the drivers are and you understand how to put it all together. But I would say that because I originally studied economics, and shipping is one of the asset classes that is the most kind of bare bones economic in nature
Mm.
because it's so demand supply, which is obviously the
Yeah,
101, eco 101,
that's
Um,
true.
so having a knowledge of economics really does help in this sector. I would say things that I found I didn't learn from my studies that I then learned on the job was the financial modeling aspect. So
Okay.
that's a big part of any deal or transaction. So obviously we spoke about the due diligence, we spoke about the sectors, but we didn't really speak about, when you're actually deciding on a investment, you obviously need to put all of these factors into a model. What is the price that you want to buy it at? What is the exit price you
Mm.
think you can maybe sell it at? And obviously you're going to be doing different scenarios of exit scenarios, high scenarios, low scenarios. You're also going to be looking at potential how much you can get on these chartering contracts. And then, you're going to be discounting that over time. And all of these take models to obviously try derive a return that you can offer your investors, or whether you need to check that against your own benchmark. Maybe it's too low, or maybe the risk isn't worth it for you, it's too high. Um, Obviously a high investment is a good one, but you always need to
Mm.
see why. If it's the price is too cheap, what's going on there? So yeah, you need to have a good grasp of the financial modeling, and that really wasn't taught in university. I mean, I didn't do
Mm.
a shipping degree, so I'm not entirely sure when someone does a pure kind of shipping qualification from a finance side. But even
Mm.
no,
Yeah.
yeah, but just
No,
even then, so
it
you're not doing the modeling. That's, I mean, to me, that's crazy because that's such a big part of the job.
Yeah, it is. I mean, we learn, the basic stuff, like when you have a fleet of vessels, all this
Mm,
Excel sheet on the return on investment, all this, we do it,
mm,
but not about all other aspect of shipping finance, investment, more deeply in the topic, no. But the good things about finance is that we have a lot of certification you
yeah.
can take. So what is the most famous one, maybe if you know them?
I mean, in terms of shipping qualifications, or you
No,
mean
like
financial?
really finance,
Oh
yeah.
yeah. Well, I'd say so. Yeah, two kind of important ones that are out there is, either an ACA or a CFA.
Mm.
So ACA is, kind of more of the accounting background. So you're really looking at balance sheets, you're looking at income statements, and you're understanding that, which is very useful for, if you're kind of getting into private equity, because obviously if you're buying a company, and now we're not talking about acquiring an asset because that's a different sort of angle, but we're talking about acquiring, when I say asset, I mean a ship or a few ships. But when I'm talking about ACA and I'm talking about acquiring a company, you obviously need to really understand the in-depths of the balance sheet and the income statement, because how do
Okay.
you how do you get a company valuation? You need to do all the accounting equations and summing it up, removing the liabilities. How can you refinancially structure this so that it's maybe more attractive to you? Do you want to take out new debt? Do you want to get rid of the existing debt? All of that. When you're buying a company, you need to consider. And so that's a useful skill, is an ACA or CA accounting kind of qualification, where um, on the CFA side, so I'm coming from the CFA side, so,
Yeah.
Chartered Financial Analyst, and that's obviously very useful in terms of understanding financial structuring, understanding the asset classes, understanding how shipping fits into the financial market, and all these different asset classes, the risk return profiles, how it all is interlinked. But the accounting side is not very, very strong there. So
Mm.
you will need to either learn on the job or kind of do sort of some more accounting courses, or practice, because it's not as in depth of balance sheet, income statement, which ACA does prepare you for.
Okay, it's very good to know. Yeah, so at least to have the basics. So yeah, I mean, yeah, finance. This is one of, if you really want to work in finance, even if it's in shipping industry, you still need to have a finance, at least some certification, or
Mm,
the better case, like background in finance, because in the other side it's more complicated. Yeah.
exactly, yeah. And I
Mm.
mean, you know, shipping or maritime, or it's although it's specialized, but that still all fits within the same accounting principles as
Yeah.
every other sector. So
Yeah.
like I said, you don't have to have a shipping qualification to understand shipping, but you have to have, if you want to do the financial elements, you will need to understand the finance, and then you can learn the shipping. But it's kind of
Yeah,
hard to do it.
on the field.
Yeah, it's hard to do it from the
Yeah.
other way around.
Okay, interesting. So I think we have talked about everything. Do you want maybe to add something, or I think we are quite good?
I think an area where what could be useful is doing things, really trying to do, understanding the market that you're going into, because as a student, and I didn't really do this because I didn't really know what was out there as much, but understanding the sectors and understanding really what kind of shipping do I like, if you like shipping, which kind of companies are there, what's out there, and trying to see if you can do job shadowing or, talking to someone in the industry to have a mentor, because this world is changing so quickly and there's so much detail, and the things you learn in your textbooks and the books you read, it's useful, don't get me wrong. I'm very grateful that I did, but it doesn't always help you with where you want to be and what kind of role you want to do.
Sure.
And at the end of the day, you're studying because you want to work, right? Or you at least
Yeah,
you want to
of
do a
course.
role. So, I think that part of the equation is missing in university, so or courses. So I think to really try and be proactive and speak to people and do your own research. I think that is very important, especially if you want to accelerate your career, not just kind of graduate and then start applying for jobs and just hope someone hires you. It's not really a good strategy.
Yeah, that's so true what you say, by the way. I mean, if you have, like, if you are proactive, it will be easier because you have a lot of people who are just complaining, saying the program doesn't offer me what I'm looking for. But the thing is that you can always learn by yourself aside your studies, and
Exactly.
that's so true. Yeah,
Or they can listen
yeah.
to your podcast.
By the way, yes. Thank you for the
There we
little
go.
advertising. I will increase the sound at this exact moment.
Amazing.
Yeah. Actually, private equity is, shipping finance is very interesting.
Yeah.
Thank you for this. You bring a lot of value in this podcast. And my goal in January was to make a podcast about private equity, and now I just achieved this goal. So it's so good.
Wow.
Thank you for that, Nicole.
You can now go on holiday for the rest of the year.
Yeah, yeah. I just went to holiday, but let's go do it again.
Amazing. Thank you
It's
so
fine.
much, Paul Louis. I
Thank you,
appreciate your
Nicole.
time, and all the best to your listeners with their future kind of maritime or private equity transitions.
Yeah, for sure. Thank you, Nicole, and have a very nice evening.
You
Bye
too.
bye.
Bye.
Thank you for listening and watching this episode. We are looking forward to bring you more insights from maritime professionals, experts, and students. Do not hesitate to follow the podcast on Apple Podcasts, Spotify, and YouTube. Your support means a lot to us and helps us to bring you more content.